Okay, all right. How's everybody doing? It's Chicago Sean McLaughlin. How are you? Happy Inauguration Day if you're into that kind of thing. I know my neighbors actually right now, as we speak, outside my window, are having a party to celebrate an inauguration. What a time to be alive! I don't celebrate politics. I don't care either way. I just want to focus on markets. But anyway, hope you guys are doing well. Wanted to give you guys an update on my trading strategy. Boy, the market's been ripping higher today, just going, I shouldn't say ripping, but it's been grinding higher all day. And anyone who employs a delta neutral trading strategy probably doesn't like it when the market picks a direction and goes that way unabated. Well, the good news for me is that so far this strategy is handling itself very well. I've been able to make adjustments, been able to stay cash flow positive all day long. And now my position is in such a way that worst case scenario, if the market were to crash, that would be my worst case scenario. But if the market were to sell off, the most I could lose, the most I would have to pay to cover my short put spreads, it's still going to leave me positive, which is a great place to be. So right now I'm in a can't lose situation. Gotta love that. So let me share my screen here with you guys. So right now I'm looking at the January 20 options. These are expiring this afternoon. We got about an hour left in the trading day. This is all that's left. These puts, they're way out of the money. I got working orders here to buy these short puts here at 1 cent, just to take them off the books. But today, I'll tell you what I did. First thing, when the market opened today, I did two things. Number one, see this spread down here? I sold a new spread expiring today, a delta neutral spread to bring in credit, right? I sold the at the time, see 381. In fact, I'll put it up on here. At the time, the market was right at 381 when we opened today. So I sold the 381 calls. I sold the 381 puts. I protected them with the 379 put, which I still have long there, and a 383 call. That was my first trade to start the day. That brought in $1.28 credit. The next thing I did is my short 379 calls that I was holding since yesterday. They were right here. They were pretty far in the money. So I rolled those out. I had to go 2 expiration series to January 25. You can see down here. I had to roll them 2 expiration series out so that I can get a credit. I rolled it to 381 because, again, that's where the market was trading at the time. And I got a 21 cent credit for that. So those are the first 2 trades. You can see the timestamps on those, 7:32, 7:33. So just minutes after the market opened, I'm in the Mountain Time Zone. And that's where I stayed for a half hour. But then the market just kept on going higher. So you can see here the next trade I did is those short calls in January 25. I had to roll them up again. Another expiration series, another strike to 382, brought in a small 15 cent credit. And then what I did is now my January 20, remember I was long these 383 calls. Well, these 383 calls went in the money. Let me clear this up. These 383 calls went in the money. So when we were at 383, I rolled those out to January 22, the next series out, and I rolled them up to 386, which at the time, we can see it right here, the position is there now. At the time, it had a 25 delta, those calls. Now they have a 34 delta. But at the time, they had a 25 delta. I was able to roll those out for 14 cents. You noticing a theme here, guys? Every time I do a roll, I'm trying to do it for a credit. Or anytime I initiate a new trade, I'm trying to do it for a credit. Later on, again, I had to roll my short calls out one more time, up to 383. The market traded up to 383, so I rolled them out. Now I'm 12 days out. You can see right here, the February 1st, I'm 12 days out at the 383 strike, but I did it for a credit. We had to do it one more time here, and this is where we're currently at. I had to roll those 383 calls in February 1st out to February 5th, which is where they're now sitting, right? You can see my position right there, 384 strike. Did that for a 47 cent credit. So again, every roll has been for a credit. That's very important. Every trade I'm trying to do is to be a credit. Now, there's one additional trade in here I'll throw in that I should highlight is this put spread in the next expiration series, which is the Friday options right here, June 22nd. I added this at the money put spread because at the time when I needed that, my delta in my position had gone to about a negative 25. right? You can see my positional delta right now is 3, so very neutral. But as the market was rallying, I needed some positive deltas to get me back to neutral. So I added this put spread. I sold the 338 put and bought the 380 put. And I brought in $1.12 for that. Okay. Now, one other trade I did, as the market was moving, this is the nearest put strike that I was short, 381 in January 20. It was right here. I was able to buy that back for 10 cents, and I just wanted to do that just to reduce my risk, which was a smart trade to do. It only cost me 10 bucks. So if I bring up all the trades that I did today, let's change this to today. You'll notice these are all the trades, and you'll notice right up here, here's my net credit on the day. Cash flow positive, baby. That's what I want. I've brought in $367 in cash flow. My commissions and fees are about, let's call it 13 bucks. So I've brought in $353 cash today. That's the goal, right? It's actually more than I wanted. I'm happy just bringing in 100 bucks a day trading one lots, but because of all the rolls we've done, it is what it is. And hey, I'm not going to complain about that. But really the most important thing here now, guys, is let me bring up my analysis tab, which is starting to make a little bit more sense to me now on Tastyworks. What are these? Let's just cancel these. I got working orders that cover these things at 1 cent. Let's get rid of them. Let's get rid of them. Get rid of that. Okay. So what we're looking at here is all of my positions after today's open positions expire away worthless. Those puts that I'm holding right now that are far out of the money, they're going to expire worthless. And what I'm going to be left here is this is going to be my kind of my P&L curve. And here's where the market is right now. So I'm right in the sweet spot. But what's cool about the Tastyworks platform on this analyze curve is you can visualize where your strikes are, where your options are. And once today's options expire away, I'm going to be left with one short call, one long call, one short put, one long put. Okay. And if you look at here, the biggest difference between the strikes is on the put side. So I'm short the 384 put and I'm long a 380 put. So the most, excuse me. I don't know why this does that all the time to me. Let's, I think now I got to zoom back in. Very funky, very funky. One more. Okay, so the most that this spread, this put spread here will cost me to cover it will be 400 bucks, right? Because if the market were to say sell off and settle down here on, let's say 376, 377, and I had to buy this entire put spread to cover it, the most it'll cost me is 400 bucks, right? 400 bucks, that's great. Now, why that's important is because, let me go back to all the trades I've done since we started this strategy. Let's go back to, let's do a custom. Let's go back to the beginning of the week. This shows me all of the trades that I've done this week, all the cash flow. And here's the important thing right here. Here's the net cash flow I've collected so far this week. 542 bucks minus, let's say $25 in commissions. So let's just say 515 bucks. It's not exact, but let's say 515 bucks. That's what I've collected so far. So I've collected 515. And now if the worst thing that can happen to me right now is I got to cover this put spread and pay the full price for it, 400 bucks out the door. Well, 515 minus 400 leaves me with 115 bucks. So guys, I'm in a position right now where I can't lose. That's a great place to be. That's what we're trying to do with this strategy. By being cash flow positive every day, by managing my risks, this is how it's supposed to profit. Now, open P&Ls right now are not all that sexy. That's okay. I just have to be patient. Like you can see right here, my P&L on the day is minus 11 bucks. No big deal. I'm in a position now where I can't lose, and that's where I want to be. So that's where I'm at today, guys. There might be some more adjustments before the end of the day. Who knows? Who knows? But that's where we're at. And hey, look, sticking to the plan here. Want to be cash flow positive. If I could focus on the cash flows, keep my risk in check, then over time, this is a strategy that should pay out. So let's see how it rolls. All right, everybody. Have a great trading day. I'll talk to you again soon. Thanks.